Imagine if every credit card in America suddenly had a maximum interest rate of 10%. No more 25%, 30%, or even 36% APRs. That's the proposal that Trump floated. A one-year nationwide cap on credit card interest rates. So what would happen if this actually became reality? Let's break down the benefits, the risks, and the ripple effects that experts are warning about. According to CNBC, about 61% of Americans carrying credit card balances have been stuck in debt for at least a year. With average APRs often above 20%, a 10% cap could save households billions. The cap could offer relief to consumers who are paying some of the highest interest rates in decades. On the surface, this looks like a massive win. Not so fast. Here's where things get complicated. Banks price interest based on risk. High APRs are how lenders offset the risks of lending to people with lower credit scores. US News reports that a 10% cap could lead to US banks to restrict or cancel credit lines for up to 90% of borrowers with a credit score under 740. That means that millions of Americans could lose access to credit cards entirely. Not because they missed payments, but because banks couldn't lend profitably at 10%. So if banks can't charge 10%, how do they make up the difference? Experts told CBS and CNBC that lenders would likely pivot fast. Here's some of the most likely changes we may see from lenders. Higher annual fees, lower credit limits, reduced or eliminated rewards programs, more fees for balance transfers and cash advances, and much stricter approval standards. Bloomberg notes that the cap could create unintended consequences for consumers and the financial system as a whole. And here's the part nobody wants to talk about. When mainstream credit tightens, people just don't stop needing money, they turn to more dangerous options. We could see an increase in the growth of payday lending, also more reliance on buy now, pay later debts, and the possible expansion of predatory lenders. US News warns the cap could push vulnerable borrowers toward higher risk alternatives with even worse terms. So who actually wins and loses if this becomes reality? Here's the likely winners. People with strong credit, households carrying large credit card balances, consumers who avoid fees and pay on time, and potentially companies that offer money lending alternatives to credit cards. Here's the likely losers if there's a 10% cap. Borrowers with fair to poor credit, anyone who relies on a credit card for emergencies, anyone who depends on rewards programs, and potentially companies more reliant on credit card interest for profits. CBS News reports that the cap could save billions in interest. It could also hurt Americans with lower credit scores by cutting off access to credit entirely. So would a 10% cap help or hurt? The truth is, both. It would dramatically reduce interest costs, but only for those who still have credit cards. For a number of people, it could mean losing access to credit altogether. And that's why experts are split. Some see it as consumer protection, some see it as economic disruption. Either way, if this cap ever becomes reality, the credit card industry and your wallet would feel shockwaves immediately. Also, we could see changes in the stock market, especially the financial sector. We could see possible volatility and big price fluctuations. What do you think? Do you think a credit cap would save Americans or shut them out of the credit system? Is it a good idea? Drop your thoughts in the comments below. And if you want more breakdowns like this, hit subscribe and I'll see you in the next one.